A diligent stock market investing is a step-by-step process. And so I want to discuss a guide to stock market investing. As you want to really make it in the market, you need to understand, imbibe, and inculcate these tips I want to share with us. It will go a long way in giving you the kind of investment returns you desire to obtain. Number one, set your investment goals. First of all, as an investor, you don't just, plow your capital into the market without having an objective, without having a goal. First of all, clearly ask yourself, what do I want to achieve in the market? Is it a short-term goal? Is it a long-term goal? What do you want to really obtain? And that would serve as an anchor to the kind of investment you're going to adopt, in the market, and the strategy you're going to apply as a stock market investor. So what essentially are your goals? You want to retire well. You want to buy a home. You want to purchase maybe a boat or a car. Want to take care of your family, want to raise money for your children, tuition, whatever is the case, make sure that you have a clear-cut, distinctive, objectives in mind. Number two, assess your risk tolerance. Usually, as an investor, we are kind of risk averse, and this issue of risk tolerance, differ from individual to individual, and sometimes it's a function of age. Those who are younger in the system, are prone to taking a higher level of risk, and those who are older, who are getting towards retirement, are prone to accommodating a lower level of risk. So maybe on a scale of 1 to 10, you rate your risk appetite. You rate your level of risk tolerance. So consider risk tolerance. That will go a long way, in determining the kind of stocks you are going to invest in the stock market. Number three, educate yourself. Investment in the market is a function of knowledge, and also, it thrives on education. The more educated you are, the more knowledgeable you are about the market, about its activities, about the way it operates, about how, stocks are valued in the market. That will give a kind of advantage when it comes to investment in the market. So your level of education is very, very important. Personally, I want to share with you how kind of, I've been able to build up my knowledge in the markets, over the years. I've been watching YouTube videos, that relates to the markets for the past 18 years. Almost every day, I must watch, a stock market related video or an investment related video. It has gone a very long way to give me the knowledge even schools, formal education could not provide when it comes to the market. As we are all aware, they don't teach you these things, extensively in the formal education setting. It is not inculcated in school curriculum, unfortunately. Number four, choose a brokerage account. Normally in the market, you don't just go to the market and buy stock the way you buy any other commodity, you buy any other goods or services. No, you operate through a broker. Your broker is the intermediary between you and the market. So you must have a brokerage account. A stockbroker will help you to open one. So through that account, you can trade, you can buy, you can invest, you can equally sell in the market. So choose a broker, get a brokerage account, and in choosing a broker, you consider a number of things which I will discuss. I will spend time to discuss in a subsequent video. Number five, create a budget. When it comes to investment, you must have a budget at hand, because you are not expected to invest the money you are going to spend in the next 6 months to 1 year. No. When you put money in the market, when you invest money in the market, it's not the kind of money you will withdraw to take care of your emergency. No, you don't do that. If you do that, you will not be able to build up your capital in the market. So make sure that the money put into the market is the money that you will not need for a lengthy period of time. And that comes with the details, you going to inculcate in your budget, that will go a long way in determining the amount of money you will put in the market that will not affect your day-to-day lifestyle. Number 6, develop an investment strategy. You have many investment strategies depending on personal preference. You have value investing, you have growth investing, you have momentum investing, you have swing trading, you have long-term investing, you have passive active investing. There are just a number of them like that. So you pick any of them you're comfortable with, and then you apply it to the market. Personally, I prefer value investing, although of recent I had an opportunity of doing a little bit of momentum investing, but that is not my core area. Personally, I prefer value investing, and sometimes I may equally take advantage of a growth opportunity. And not only that, number 7, research stocks. You don't invest without research. You research these stocks thoroughly. You spend time and research each stock you want to invest in. And when it comes to stock research, I think that this one could be a separate video entirely. So you research the stocks, you look at turnover, you look at profitability, you look at cash flow, you look at earning per share. You equally consider the price earning ratio. Many other things like that are involved in stock research, which I wouldn't want to go into details now. I think I'll find time to create a separate video on that. If you really want to watch the video on this area, please subscribe to this channel and help me click the notification button and give me a thumbs up. I'll be encouraged to bring these aspects of the market to you in my subsequent videos. Number 8, build a diversified portfolio. You don't just invest in a single company or in a few companies in a few sectors. No, you make sure that your investments are well diversified across different industries and across different sectors. That would mitigate your risk. If one sector is not doing very well, it will not affect your overall investment, and of course you will have a smoother return as a result. Number 9, place your orders. After researching your stocks and also you've decided on where you want to place your investments, the sectors you're going to buy your stocks from, you do what? You place your order. You place your order through your broker, and your order could be, it could be a limit order and it could be a market order depending on the objectives you have in mind. I think I usually spend time to highlight these key difference between the limit and the buy order. I think I will find time to create a content in relation to that. Number 10, you monitor your investment. After buying your stocks, you don't just go to sleep, you don't just go to rest. You monitor your stocks regularly, particularly every quarter. Whenever the companies release their results, you go to the results and see precisely whether they are still making profits or not. If they are still profitable, then of course you can go ahead and keep on holding your shares. But if they record losses, I would advise you sell and then increase your holdings in those that are making decent profits. And not only that, number 11, you keep on learning. The market is a learning process. Just like I told us earlier, I've spent a long time in the market. I'm telling you, I am still learning. I'm still learning. Someone said an expert is an individual who had made virtually all the mistakes you need to make in a narrow field of study or in a narrow field of enterprise. That's an expert. You've made all the mistakes you need to make to the point there's virtually none to make again. That's what makes you an expert. Me, I've made almost all the mistakes, yet I don't consider myself an expert because there's still much and much to be learned in them. The market is evolving. The market evolves, it grows, and is information driven. And so what you knew many years back may not be applicable in the current market or in the current system again. So you have to keep on learning and learn. And the more you learn, I'm giving you the assurance that the more you are going to earn.